among the other theories. I want to actually ask Ajay about this. Ajay, what do you think? Did markets have an inkling Friday evening, which is why you saw that big fall? And secondly, we started with the conversation and Neeraj and I were on the same page on the point that, yes, there will be a huge knock to Indian markets because we're going to feel those global tremors, but relatively we're okay. And which is why our recovery may be faster. Is that something you subscribe to?
I really don't know because it's unprecedented, this time how deep it's gone. There are three things I would like to put forth in terms of the market. One, I think there was the US Embassy, social media post, Tamanna, where they said that all people can leave today and Israel today, and US Embassy will pay for their travel. So all families were sent out of Israel. That kind of hurt sentiment, and that was the point at 3 p.m. So maybe that was one thing. I don't know if anyone knew in advance, and because there was heavy FI selling also. So that remains a conjecture. Second, on India's recovery, past oil, spikes, we have been hit quite hard to start with, and then we bounce back also. So totally agree with you on that. The oil intensity in the economy is lower. But definitely with 85% of crude coming to us, and we are very dependent on that straight shipping. So most of our Gulf oil is coming from there. There is a pipeline from Saudi going west to east, which takes oil to Europe then, out of reach of the Houthis. There is a pipeline of Abu Dhabi, which opens in the Gulf of Oman. So hopefully something will come there. Today, we have heard of one tanker which was going from Oman to Iran being rerouted to India. So I'm sure our PSUs and our private sector refining companies are working overnight. There are about 200 million barrels on the high seas, Tamanna, which are, in ships. Iran had emptied out its terminal over the last 2 days because they had been anticipating this attack. So China is also well supplied with oil. There are hordes of ships, nearly 600 shadow fleet tankers are there on the high seas with oil.
Sure,
but
Mr. Bagga.
Definitely.
Mr. Bagga, I'd like to get your view on with all of this that you've just said, what's your call? Let's assume we start off slightly lower Monday. Tuesday is a holiday, etc. But let's assume we start off slightly lower and stay lower. Is that an opportunity to buy because India is not front and center? Or do the crude volatility, if you will, puts us slightly lower on the preference list right now?
We are lower on the preference list. You don't have any catalyst to show a foreign investor why you should come into India in this kind of a scenario. So don't buy. It is going to open with a big gap down, and just watch from the sidelines. I'm not saying to sell either. These are not the right prices which we will get on Monday, but I don't see a sharp recovery immediately. So that won't be the point to buy. There are 4 levels of successors at every point in Iran. Now they will not announce the right successor, Neeraj, because there are moles sitting in Iran at every level. The foreign intelligence agencies will. It's a death warrant if you announce that Khamenei's son is there or Khomeini's grandson is announced as the supreme leader. Immediately they'll be assassinated. So they will have things in place. There are 88 clerics who choose. There are 4 levels at every level. Now the big thing, again, what I started with, are they going to play ideology or are they going to play survival? I think they will play survival eventually, but they might need to take a few more knocks for that. And they have opened up by attacking the GCC countries and Bahrain. They've really opened up the whole scenario. They don't have any friends apart from China and Russia today that count. So hopefully ideology will be subservient to survival. We will see some kind, and rhetoric will stay high. So don't see the rhetoric. See on the ground what is happening. Are they still launching drones? Are they still launching missiles? Remember, this is the country which supplied 58,000 drones which landed in Ukraine. 58,000 Shahid drones have attacked Ukraine till now. They have 3,000 ballistic missiles. Out of that, hardly 200 have been fired so far. Some will get through. So do they take on the might of the Americans, or they realize that this is done for now? Let's sue for peace quietly while maintaining the rhetoric for the domestic audience. I think that's the best case scenario we have, but it might take a few days to work out. So no buying right now, Neeraj, would be my analysis. Don't try to catch any of these falling knives, because they're not falling for fundamentals. They're falling for sentiment, and that can go much deeper. The issue is quite deep, and it's not a walkover like Venezuela. They have 4 layers of leadership for every post, so they are not going to go away that easily. But the big thing is, will there be a practical person sitting there who says, let's survive, we will see after a few months? That is the big crux.
Yeah, so I think remittances or crude prices, all of that comes in. Sentiment will be bearish Monday morning, but what are the sectors that can get impacted, and what is the extent of hit to India on crude prices spiking? I'm going across to Somit Sarkar, who's joining us for more on this.
Well, yes, Brent crude is currently trading at $73 per barrel, which is not reflecting the actual impact of this war. So Monday morning is something that we'll see that. But given the fact that oil is expected to be on the higher side, this will definitely have some bearing on India, because nearly 85% of our energy requirement is met via imports. However, the intensity of the same has come down, but still, given the fact that 85% of the energy requirement is met through imports, there will be some impact not only on multiple sectors but also on India Inc. as well, given the fact that a 10% increase in Brent prices increases the CPI and WPI or inflation by around 40 to 80 basis points. A 10% increase in crude oil prices also widens our current account deficit by nearly 30 bips. And if you look at the sectors which gets impacted, now firstly, when it comes to the oil marketing companies, rising crude oil prices will impact their marketing margins. Higher crude prices means lower marketing margins, and a drop of around 0.5 rupees per litre drop in the marketing margin impacts the EBITDA of oil marketing companies, that is IOCL, BPCL and HPCL, by anywhere between 7 to 11 odd percent. When it comes to paint companies, nearly 40% of the raw material cost is related to crude oil prices. So that could also, this could also impact their margins if there is a sudden rise in the crude prices. And when it comes to aviation companies like Indigo and SpiceJet, 40% again of the raw material cost is crude oil, is related to crude oil, because ATF cost for the major part of their raw material cost, and if that increases, again their margins could also get impacted. When it comes to lubricant manufacturers like Gulf Oil and Castrol, 50% of their raw material cost is crude derivatives. A rise in crude oil prices will impact them as well. And when it comes to tire companies, synthetic rubber, carbon black and multiple other chemicals, the prices of these raw material are derivative of crude oil prices. A rising crude oil prices will increase the prices of these raw materials also, and these total raw material form nearly 40% of the total cost for any tire company. When it comes to cement companies, again 40 to 50% of their cost is either directly or indirectly linked to crude, and a rising crude oil prices could increase their cost as well. For specialty chemical, multiple companies stand to get impacted because key raw material prices are again related to crude oil prices. But on the positive side, for explorers like ONGC, Oil India, Vedanta and HOEC, for them it will be positive, given the fact that a $5 per barrel rise in the Brent crude prices will impact positively their EPS by around 7 to 12 odd percent. But do remember, to actually realize this impact or to actually see the negative impact, crude oil prices need to stay higher for a longer period of time. If it is just for a short period of time, there won't be much of an impact.
Sure. So, okay, there's going to be a lot of this that we'll dissect. And in fact, we have Devina Mehra also with us. We're going to get a market view, all of the action this Sunday on NDTV Profit. But, you know, Somit Sarkar talked about the impact on airlines because of the crude prices sending their input costs higher. But it's not just that. There have been a slew of cancellations. I'm going across to Danish Anand. He's outside the Delhi airport.